Moneyweb now. On the money.
This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. Chatting now with Tertia Jacobs, Treasury Economist and Fixed Income Specialist at Investec. Tertia, appreciate the early morning time. July inflation local 4.3%. Big drop down from the 5% we saw in June. Is this, and I appreciate the complexity of the question, but I mean, is this sort of sustainable, or are we in for volatile inflation going forward? Because I'm looking at potential fuel price increases for September. There's a lot out there still impacting the data.
Good morning, Simon. Yes, spot on. We can see that the volatility risk in inflation forecasts have increased. You know, the previous month we had the unexpected jump to 5% because of passenger tariff increases. And then this month we actually had a lower outcome. So I think perhaps if we can just think why this number came out lower, it was basically because food price inflation remains more subdued. You have your rand-sensitive categories registering very small price increases. For example, vehicle price increases year on year is like 0.7% higher than this time last year. And also, we had, although it was expected, was the July petrol price cut. Yeah. But as you rightly point out, we are preparing for a petrol price and diesel price increase in September. So this is likely to be short-lived. But I think what has changed perhaps, and this is, you're probably going to lead to what we expect for the MPC in September, is that the peak could perhaps be a little bit lower if all else remains unchanged.
Okay. And that maybe is the key point, because you mentioned, food inflation at 16-year lows. And then I see El Nino sort of on the forecast. There is that volatility, but I take your point. Maybe that peak is lower, and maybe that's what Saab was seeing when we got the surprise hold last time. Certainly, it was, I think, for most people a surprise. But maybe we can sort of stay with that if we're going to see that peak at a lower level. Maybe Saab can get away with just one increase.
Yeah, and what's also happened now yesterday when we just look at the ZAR is that the US Treasury has now indicated that they're going to buy back or double their purchases of long-dated US Treasury yields. And the dollar has subsequently come under pressure and the rand has strengthened. So that's another additional source of, disinflationary pressures. So you've got the petrol price story, you've got the US interest rate outlook, you've got the US Treasury buying long-dated US Treasuries, or as I said, they're doubling the amount that they're looking to buy. And then you've got the stronger currency versus the fuel price impact in South Africa. So it's actually a very difficult balancing act for central bankers in terms of you've got the elevated, headline inflation numbers, yet the components of inflation is actually quite all over the place.
Yeah, absolutely. And the irony is, I think, the MPC probably thought 2026 was going to be a nice relaxing year for their committee meetings every 2 months. Not the case at all. Help me with something. July, I thought, was traditionally the month when the new municipal tariffs came into effect. And it was partly why I thought we might get a better, maybe not a 5%, but a higher number than we certainly saw at the 4.3. Was I wrong about the municipal, or was it just less of an impact?
You're absolutely right. When we look at electricity and water tariff increases, so what's happened with the electricity tariff increase under the multi-year price agreement, the annual rate of increase for this year was slightly lower than last year. I think it was around about 9% to about 8.3%. And also, NERSA did not allow municipalities to give that full increase through. So the annual rate of increase was slightly softer than this time last year. And the same with the water tariffs. They remain elevated, just under 7%, but because it has not accelerated, the year-on-year effect is then more subdued.
inflation base effect. Always forget about the base effect, which is a huge component of the... Wayne McCurry always used to say the one thing that kills inflation is time because of base effect. We'll leave it there. Tertia Jacobs, Treasury economist and fixed income specialist, Investec. Always appreciate the early morning insights. And that's our poll today on LinkedIn. It's the worst behind us for inflation. Tertia makes a great point there. Volatility is still in place, but maybe that peak is going to be a little bit lower. Have your vote, have your say, LinkedIn. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions.